You know, I came into today's session looking for action from transportation. I told you this last night, and guess what? We actually got it from CSX, the rail company, when they inadvertently released their results before the closing bell. Now, the earnings came in at 47 cents, down year over year, but they beat the street, in fact, by 3 cents. You can see the stock did pretty well. In fact, the Dow was already kind of climbing off the canvas when that news broke, but it gave the bounce a little extra oomph. The blue chip index, of course, reached another record high. S&P 500 also at an all-time high, although by the tiniest of fractions possible. But a win is a win, right? Now, here's the thing. Oil was a big loser. I was telling you to look at that also, but the EIA report saw crude drawdown was less than expected. On the other hand, gold continued to soar and Treasury yields plunge. All of this reflects that persistent anxiety, right, that record equity so far has not been able to dissuade. That angst continues to set the tone for stocks, too. Look at this. This is the breadth for the New York Stock Exchange. 304 stocks at 52-week highs, only 2 at lows, so people are buying the blue chips. Now, the biggest name to report after the close is Yum Brands. I talked about this earlier. 75 cents, they beat the street by a penny, but the stock is doing extremely nicely in the aftermarket. That's because management was able to guide full-year corporate earnings profits. They say it's going to be up at least 14%. Keep in mind, this past quarter, second quarter, only up 7%. That is a lot of growth. Now, tomorrow morning, J.P. Morgan, they report before the open. The street's looking for $1.49. In the meantime, I'm seeing some encouraging signs between banks and Main Street. Now, after peaking in 2012, year-over-year demand for all types of consumer loans tumbled and tumbled and tumbled. They hit rock bottom last year. Second quarter auto loans, though, this year up 18%, almost 100% better than a year ago. Credit card demand up almost 13%, 39% better year over year. And consumer loans, all the other kinds, up almost 6%. Last year at this time, down more than 1%. So far this year, well, we've seen an impressive inflection of loan demand, and I continue to hear horror stories about the approval process. Nevertheless, it's encouraging. Keep in mind, low yields should drive demand for business loans, certainly refinancing loans. Who's not thinking about refinancing? So even though it hasn't been the case, it's got to happen sooner or later. In the meantime, the only S&P 500 sector in the red this year, you got it, financials, down more than 2%. Overall, weighed down by the heavyweights. It's the mega banks that are hurting these things. Think about this. J.P. Morgan down over 4%. So financials can find a way to rally before these interest rates increase. Then you can see the overall stock market rally start to cook with gas. I don't have a stock pick for you tonight, but go to my website, wstreet.com, for daily updates, guidance, free stuff, because this ride is just getting funner and funner. Not sure if that's correct grammar, but it is true.